We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up Meli. We are on the 12-month time frame. Price action, last candle to right hand side, is reading as a bullish green candle. We do have price action overall, higher highs. Price action overall, lower lows, midpoint, also adding second level highs, third level highs, and fourth level highs. Current price is sitting at 1046.08. So if price pushes up further, it can tag that resistance line near the numbers of 1186.52 before tagging that midpoint between that resistance line we just read off and current price action at 1104.32. If price pushes down, it can tag that support line in white at 956.36 before tagging the midpoint between price and the numbers we just read off at 1011.16. So if this market pushes up, let's see where it's coming from. So if we think about having imaginary lines near price coming down, it'll identify as market spike down to that low. So we have a first, second, third, fourth, retest 1, retest 2, retest 3. So it took 3 pushes from that bottom of lower lows to break the midpoint. Once the market broke, it identified as the break, the retest, second last candle identifying lost a lot of momentum towards that bottom, followed up with a bullish green candle trying to push up from that break and retest. So it's coming from multiple 1, 2, 3, 4, 5. So it's a 5 pushes down to that bottom, or you can read it as a triple bottom and a double retest. Market broke through, came back to retest, and now we can see price action is trying to work its way up through the second last candle, which will make it near that midpoint, and that's where we may see the break and retest for that market to push up further. So it'll may identify as the first leg coming down with the second towards the second last candle. The second leg was current price. We still look for that market to push up. So we look for that market to break, retest that second level highs with the third leg, come back and push up again. So we'll have that W formation. If market pushes down, it's coming from the multiple spikes up to that high with the third and fourth last candle market. The third last candle market identifying losing it lost a lot of momentum and may be declining for the reversal, and we did receive that, followed up with the second last candle, and price action is a consolidation, so it's working its way sideways. So that means we are looking for that breakout to the top side or breakout to the bottom side, unless we receive that consolidation within that bottom half of the second last candle market candle. Going back to if price action dropped down from that high, it will identify as market spiked up with the first leg, second leg. We don't know how far price action is going to push. It will identify that as we walk down the time frame. Market could be stopping at this level of second level highs, but that third leg dropping down for that fourth leg, creating that M structure. Once we receive the break of the midpoint, we are looking for a retest for that market to drop down further. Working our way to the 6-month time frame, price action 6-month time frame is reading as a bullish green candle, spike down to the low, second last candle, spike up to the high. So it's consolidation going on in here, and it could be a huge doji as we walk down the time frame, but we definitely see the consolidation. Why? Price is within that second last candle of that body and wick, and then price and second last candle is within that consolidation of that third to last candle. So if we break down those levels of highs and lows within the third to last candle, what do we have? We have a high, we have a low, and we have that midpoint, and we can see price action actually broke the midpoint of our white SR line and our red SR line we covered over the white. So that means as we walk down the time frame, we are looking for some type of break and retest for that market to push up. But for sure, to see that market pushes up, price action would have to engulf that second last candle wick to push that market up further. So on this time frame, if it pushes down, it's reading as a first, second. It can stop at the midpoint of that overall structure, push up for that third leg, drop down, receive that double top. Unless we see that market pushes up for that break and retest, and the market pushes up further, and we'll look to see what's going to happen. Working our way down to the 3-month time frame, price action 3-month time frame, reading as a bullish green candle, spike down to low, so it's tagging that area of the low, which would be the midpoint. Second last candle is a doji, so it's consolidating within that second last candle, and that third to last candle still within that fourth to last candle, looking for that breakout of that area, so that we can see where market's coming from, that double top as we talked about earlier. So if it drops down, it doesn't break that midpoint of structure, we can see that market identified as a first, second, third, fourth retest, and we'll see that market drops down. But if the market drops down, it has to break through that support and break below the third and fourth to last candle in the market, and we're looking for the retest or maybe a retest candle for that market to push down further. Working our way down to the monthly time frame, so price action monthly time frame, we do know that the market identified the break and retest. So this is market starting off the structure all over again to see if it's going to push up further, and if it does on the monthly time frame, we'll identify that first, second, third, fourth retest, and market pushed up with the price action candle. So let's read again: first, second, third, fourth retest, market push once. Once the market broke that support line, we are looking for the retest as we walk down the time frame next to price, unless the market still identifying bullish green candle and pushes up further. But we definitely want to see the engulfment towards the third to last candle, which is currently trying to do. But definitely that second, third, fourth, fifth, sixth to last candle high, we are looking for price to break above that area. So we can see anything within that sixth to last candle towards that top side of that bottom side is consolidation. That's why we're starting to see that pattern form, and we can see it coming down in red for that first, second, third, and that fourth. So it's a double bottom. So market's coming from a single bottom and a double retest. Working our way to the weekly time frame, so price action weekly time frame, reading as a bullish green candle. It's trying to close the formation of that W. So let's talk about it. We can see that structure of that, let's just say double bottom and a retest, or it could read as look like a left shoulder, a double head, and we have a right shoulder, market push up, head and shoulders pattern. Or you can read it as spike down to the low, overall decline W, first, second, third, fourth retest, market push up from a double bottom and a retest. This is why we're looking for, we do have that break. This is why we're looking for the retest to see if it's going to push up further. Unless price engulfs the previous side, it can tap at the top side of that area or come back down to that white line and then push up further. Working our way down to the daily time frame, which reading as a bullish green candle. Second last candle is a retest, spike down to low. So what happened is that third to last candle has pushed up, came back to retest, pushed up again, and it's identifying a break and retest. We do have engulfment towards the price, towards that second last candle. Body of the price action candle is above the previous second last candle body and wick, so that market could push up further. We can also see that price is between a midpoint of the white SR line. So as we walk down further, we're going to put a zone around that area so we can see what's really happening. So overall, going a little bit above the SR line, a little bit below. So let's take a look at what's happening. So we can see that market did tag that SR line multiple times. Towards the left side, we did receive, look like a first, second, third, fourth double top. Market came back to retest. So wait, hold on. Double top. Market came back to retest once, twice, 3 times. If it doesn't break up, it pushes down. Market's coming from a total of 1, 2, 3, 4, 5. I actually want to add this candle here. So to me, it'll be a double top and a double retest, and market could come down. But if it breaks through, you are looking for that market to break through that zone, retest the top of that zone, and push up further for a break and retest coming from that structure of the first, second, third, fourth double bottom. Okay, guys, MELI stock.